Welcome to forextrading.com. Let's take a look at another trade example. Like usually we're gonna look first at the euro dollar 4-hour chart to know what the trend is. Well, it's uptrend growing really fast with some continuation pattern between those two episodes of buyers coming in here and below that pattern, and we see a continuation again, and the market is moving very fast to the upside. Let's take a look at 30-minute chart. Well, here we go. This is this continuation, the last one we are talking about. You see, last continuation was very similar but smaller, and it was also happening with a fake break. As you see, here we got continuation, we got a breakout to the upside, and we got sellers coming in just for a few moments. So what I'm saying is patterns might be also confusing, and this time, for example, if you enter your trade here long and place stop below this point, below this last level, when the price reached 28.42, you would be stopped out most definitely, unless your stop would be much higher than that. Anyway, this pattern is much bigger, I mean much longer than the last one. It's almost the same, and we were waiting for the best situation to find the upside movement to enter the market. Well, here we got this support resistance line the market met for the first time, and most definitely, like this moment right here, most of the time it is the moment market will show you that it really won't move lower than that. I mean, it's a classic example. It doesn't have to be like this, it can go lower as well, but some of those points will show you the minimum of this move, I mean the range of this move. So this showed us the range of the move that will be most probably showing us where to place the stop. As you see, the market was in this level twice, and we could enter the trade here when I showed the tick mark and I placed the stop below. It's okay to do this, and the market was already trying to go to the upside, or we could wait. You see this wave right here showing us there are no sellers, there are no buyers, so it is the right moment to wait for the buyers to come in to take over the market, and there they go. I mean, here we got some stronger buy-in, and we got little pullback, and we got a breakout, which is pretty much beautiful. So we could place an order right here as well to make it happen, somewhere around here, with a stop loss at the same exact point like before. Unfortunately, we can't place stop loss like at just below those recent last candles. Why? Well, I've been watching this retracement at the demonstration account, and I did this mistake even though I was doing the same trade 1,000 times. Well, when I was seeing the bottom was made by this move, I thought this is it, so I've entered the trade on demonstration account around here, and I've placed my stop just below this candle, which was obvious mistake. We do not do this. If you can't afford to take the trade here and place a stop loss below the line, don't do this. Wait for the market show you that he's gonna meet this level again and start to grow for the another one more time. So take a bet here, and the stop loss will be shorter then. And when you're afraid to hitting your stop loss above 50 points, for example, like I was at that moment, and this was only a demonstration account, or on real life account it is much different to place a high stop loss, because you're not feeling comfortable even though the market is showing you there are not real sellers coming in. Well, it's always something you have to stand face to face with it, and do the right trade. I mean, the stop loss have to be not too big and not too small, and the trade has to be in the right direction. Well, when you do the trade in right direction, like you're buying here in this range, when you're buying in this range, whenever it's here at the beginning or somewhere else, most likely you have the bigger chances to profit from the market. And when you place your stop loss in the right place, you have like 70% to profit from the market in this pattern. And if you enter in the right time, this probability is even better than 70%. I mean by my experience while trading. Of course, market can be retracing sometimes below that line, and it happens like it happened before here. Well, there is nothing you can do about this. There are some reasons market is moving the other way, or this time, for example, it was before 9 o'clock, as far as I remember, before you opening European markets. So we were talking about the breakout before opening Europe stocks. So this is not the kind of move we would take just before opening Europe. That's the one reason we wouldn't take this trade, and we would be interested in this kind of move growing here strongly. So this would be no accident, because no trade would be taken in the long, I mean short side, but for a longer time. I mean, I've took the trade here, for example, short, but it was a very small position and it was really for a short time. So half of it was with a profit, half of it closed with break even stop loss on break even point. Here situation was much more simpler. The price range broke out and it will be probably retracing to 30, 46 levels, somewhere around here, or a little bit lower, and we'll see what the price will show us when it will be retracing, coming back to this level, and hopefully it will grow much faster like it happened in this move. I think that's pretty much it for this kind of trade. It's a classic example of pattern, rectangle continuation pattern. Whenever it's very small, or it's in a longer period of time, you can adapt those universal rules to make it happen, to enter the market in the right time, or enter the market with right stop loss, that the expanded time wouldn't clean you out, and the market will be probably moving in the same direction as before, so you have the right chance to profit in the future from the market. Thank you very much for watching this. I hope to see you with different trade examples, different analysis. Thank you.